Hello and welcome to the Decrypting Crypto podcast. It is July 24th, 2025, and we're here with your weekly recap of the biggest stories in the crypto space. I'm Matthew House Barbie, and as always, I'm here with my wonderful co-host, Austin Knight. How you doing, Austin?
Good, Matt. Good to be back on stream. We are quickly evolving into live streamers on this
We
podcast.
we did we did live stream last week, and then there was this like horrible echo, so we failed in our second week. But I'm hopeful that we've figured that out this week, and we're not going to have the same issue. Um, well, today we've got a bunch of stuff to talk about because it's been, last week and coming through into this week, a really interesting spot where the market is at right now, and we're going to take a little bit of time to talk through that. We talked last week a lot about any of the different crypto week legislation that had been passing, and I think it's fair to say crypto week did not disappoint last week, right?
Yeah,
So
it
we've
was
got,
good.
yeah, and we'll recap a few little extra pieces around like the legislation side of things at the end. We're going to talk quite a bit about ETH today, and just where we see the market going from here, which feels like a bit of an inflection point. So why don't we why don't we start with a few bits of data that I was looking into to begin with. I think it's fair to say, we're on Thursday right now. Crypto's taken a little bit of a breather this week, especially near the tail end of yesterday. Equity markets briefly felt that as well, but it was without doubt an enormous week last week of price action and volume in general. One of the things that I look at a lot as a good bellwether for how much interest and is in the space right now is the spot market volume kind of aggregated across all of the major centralized exchanges and then the dexes. And I tried to look at these separately because typically you start seeing much bigger inflows into centralized exchanges. You start to see you get a better sense, I think, of big spikes because DEX volume actually tends to be a bit more consistently high, even when centralized exchange volume can be a little bit lower. So, week over week, last week, centralized exchange volume across the majors was up over 65%. That is a very big week over week gain. And the week prior to that had actually already gained pretty significantly. That's the biggest week of spot volume since late March. So
Hmm.
pretty big. Then when you look at DEX volume, and I was actually expecting DEX volume to take a much bigger leg up because of the fact that we'd seen a bit more on ETH and altcoins. It only rose 14% week over week. However, what I will say is when I was looking at the charts, actually, for probably the past 6 weeks, it had been in incredibly elevated levels and
Okay.
had kind of has reached a high where actually last week's DEX volume, the only week that beat it this whole year was the Trump token launch, which was just a monster week by every measure. So that's very positive. It doesn't surprise me that we're seeing a bit of consolidation and trending a little bit sideways. And something that really has kind of caught my eye has been how Bitcoin has performed through all of this. Obviously, last week we talked about BTC hitting kind of new all-time highs in the I think that was the week prior, right? That we pushed past 120, or maybe it was that prior weekend. On the 7 day, Bitcoin is kind of down to flat. If we let me bring up the view here. We can just have a quick look at the chart while we're going. Share this tab. All right. So if we take a view here of the BTC chart, let's have a little look over the past 5 days. Pretty flat, and actually BTC volatility has been pretty low. We look at this, and this was kind of where we were at. What was it, the 9th, 10th of July, and we had this huge leg up through into the 14th, where we hit that 123k, and you kind of see pretty much after that it's just been range bound for kind of quite some time. Now, very different story when we go to ETH, which continued to around the time where BTC was having a leg up. It saw that leg up, but where BTC then went through this period of kind of sideways consolidation from basically along here, we saw this huge increase in price, and we spiked it above 3,800. And it's interesting because yesterday I was like, "Oh, it feels like ETH's really cooled down," but the reality is we've seen a very minor drop down, and actually on the 7 day we're up about roughly 7%. Sorry, 4% on the 7 day, as you can kind of see through here. So I think it's it's interesting to take a look at where we're at and just how BTC is performing in context to the rest of the assets.
Yeah, it's true. I mean, to me, I think this signals a sort of maturity. It's behaving almost like a treasury reserve asset. So it's less like a tech stock and it's more like digital gold.
Yeah,
Um, to
which has
see
kind of
to
been the
see that level of
promise.
stability.
That's been the promise for some
Yeah,
time now, right?
that's right.
Um, and I think and you can kind of see this when we look at some of the volatility of BTC. It really, I'm going to kind of share here. It really is not showing a ton of volatility. This is a very zoomed out view. This is the year to date, right? So we can see kind of like the volatility index. This is coming up into March. Obviously, when we reached like kind of peak BTC volatility, we were pushing past into price discovery, and then obviously everything that happened in that huge stock market tank. This is, I think, around Liberation Day, right? But
Mhm.
here we are here, not much more than what's been happening around June. And this is really what BTC volatility is, what creates huge spikes in spot volume for BTC. And so you can kind of see the difference here. I think it's useful to look at volatility whenever you're analyzing where things are at in the market and how things are responding.
Yeah, it feels like Bitcoin is growing up a little bit coming out of adolescence. It's going to potentially be maybe one of the more stable crypto options going forward, which is interesting to compare against what ETH has been doing, right?
Definitely. And I mean, we talked about these ETH treasury, sorry, we talked about treasury companies, mainly through the lens of Bitcoin treasury companies a couple of weeks ago, where we did a big deep dive in that episode. So if for anyone listening and you haven't, you want to learn a little bit more, we did a pretty big deep dive. You can go check out the podcast on that one. But all of the focus really has been around BTC when it comes to treasury companies and the amount of volume. ETH has been getting almost like on a daily basis major announcements on kind of purpose built ETH treasury companies um, that are launching, making big purchases, and more importantly, raising debt to make a purchase very soon. This is growing quite a lot. And I think this is what has really helped trigger some of this run up in the anticipation of all of this. Um, the thing with ETH, though, I think it's in an interesting place right now. I said at the start of this episode, I think we're in a bit of an inflection point, and here's why. So on one hand, and I'm going to bring up this going to bring up this chart actually because this is quite eye opening. The ETH validator queue has seen a huge surge in operators joining the exit queue. Over 2 billion in value is in the queue. Now, for anyone listening that may not really know what that means, here's some kind of context going into this, right? So when we talk about if you're not that familiar with how validators work, I actually run a couple of ETH validators myself, so know this very well. You, with ETH being a proof of stake chain, you have to obviously lock up a bunch of ETH in validators, and if you want to get access to that ETH, so obviously 32 ETH per validator, you need to withdraw and exit your validator from the queue. You can't access that 32 ETH from your validator. So if you wanted to sell, you can't. And there is a waiting time. So let's just have a little look here. I think like right now, and obviously there's a relationship with the amount of capital looking to exit the validators to the time. We're sitting at around about 11 days right now. Usually it's a lot smaller than that. But because of the increased surge in demand, it takes about 11 days to access. Now look at this red line. This red line is showing in ETH terms, and sorry if this is a little bit small, I'll just explain it. This red line is showing, in June, the middle of June, talking about like, barely any validators exiting the queue. So 224 validators exiting. And then we come into July 17th, right? And all of a sudden, 55,000. 255,000 by June 19th. We get up to the 24th, we've got 640,000 validators in the queue for exiting. That's over 2 billion in value. So when you're looking at this, you're saying, okay, I wonder why all those validators are exiting. It's probably signaling people are seeing the price action and they either want to be ready to sell or are actively planning to sell. So there's a there's a really important component there. So then that news started coming out, and I think ETH had a bit of a wobble. People looking at that. On the other hand, some really interesting data when you look at ETH spot ETFs and some of the inflows that they're seeing. So on Tuesday, we saw the third largest day on record for Ethereum spot ETF inflows. This is net flows, right? 533.8 million. And look at this, it's second to this one that happened a week prior, 726 million. So I think like the all-time would have been, actually, do you know what? I think that's potentially the second highest. I might be wrong on that, actually. Actually, they're all from this past couple of weeks. Yeah, they're all from this past couple of weeks. These huge spikes. Yeah, we've got the 16th, the 17th, and then the 22nd as the three. So you can see, yeah, sure, there's a load of validators exiting, but there is enormous institutional demand for ETH right now, which brings me great joy, as I'm sure you can imagine, Austin, after much time of this asset just not budging.
Yeah.
But I think it was inevitable.
It was inevitable. But it's also just a kind of a beautiful pattern that we're seeing here. While validators are exiting, institutions are entering via ETFs. And I think that this divergence shows ETH's evolution from a technical platform to an investable asset class, which is sort of a barrier that we've been wanting to break for quite some time. Obviously, ETH has its own utility, but being able to view it as an investment is a whole other thing. And so I think that maybe I wonder if we might see ETH become the sort of risk on institutional crypto investment, while Bitcoin remains a little less volatile and a little more stable. Bitcoin could be the place that you go to for safety in terms of a crypto investment, while ETH could be the place that you go to for upside.
Yeah, and I think we talked loads about stable coins as well recently, and
Hmm.
stablecoin summer. The Circle
Yeah.
IPO basically going all the way up. We're seeing tons of major US banks talking about launching their own stable coins. I actually think that within the next 5 to 7 years, every single major US bank will have their own branded stablecoin. I think we'll have Bank of
Hmm.
America coin. I think we'll have JPM, like the lot, that will be pegged to the dollar. Well, pegged to deposits. But I think that what we've seen, and Crypto Week really illustrated this a lot, is that investors want exposure to this boom in stablecoins. Where do most of these stablecoins live? On Ethereum. You know,
Hmm.
like
That's right.
all of
Yeah.
these stablecoins, they're on Ethereum, and it makes sense for this to be an exposure play as the total growth of stablecoins really
Hmm.
starts to accelerate. So does ETH. Um,
Yeah.
so
This is where you see the sort of platform and ecosystem play that we've been talking about for, well, I mean, really since the beginning of
it's like
Ethereum.
the fat protocol theory, right, from the very
Yeah.
very early beginning, and
Yeah.
I think that makes a lot of sense. It Something that I was watching that gave me confidence that this ETH rally had some legs when we were kind of midway through is ETH NFTs started to see
Mm.
some movement. They have been absolutely dead for the longest time, even through the early part of this year. They barely moved because meme coins were taking all of the attention. Now we
Mhm.
start to see punks take a big move. There were some huge big buys actually of punks. So I think they're up around 14%. Their floor is in the past 7 days in ETH terms, more so in dollar terms. Pudgy Penguins 11% up. Even Bored Apes moving 8%. I Pudgies is a crazy story, really. I still can't get
It just,
over.
I can't ever take it seriously, and it keeps coming back, you know?
Well, these the Pudgies, I think, are like a really truly amazing success story in
Yes.
NFTs, and because I think they really have actually built a brand that's transcended beyond um, just the NFT space. I think that they're like one of the most used Giphy gifs, like of anything. They got into like Walmart. They had the plushies. They've really started to build a brand and do something there. So it really wouldn't surprise me to see them as like a consistent leader in the ETH NFT space. To be completely honest, um, so it's interesting. And talking about NFTs and memes, meme stocks are back. It's kind of crazy. I was looking at this chart in the FT. Let me find it. So here are the stock prices for basically since start of July for GoPro. Krispy Kreme.
Nice.
Also love that Krispy Kreme got the bid. Uh, Open Door, which kind of was a little early to this and has seen a sell off. Coles, which was like subject to some pretty big short action. It's hilarious. Like, who decides on
Mhm.
where they're going to go after? Because I'm pretty sure a ton of these stocks have a lot of like short action that they could pick. But GoPro and Krispy Kreme seem to be somewhat unrelenting in their upward movements. There's been a huge amount of like, yeah, it's just pure retail action. And what that usually results in is a bleed over into the crypto space for sure.
Yeah.
I'm pretty certain that that is kind of, the canary in the coal mine for the meme coin bid that will eventually come into play as well. So there's a
Yes,
lot of things.
this combination of NFTs and meme stocks having retail action, I think could be, the canary in the coal mine for ETH retail speculation. Perhaps, you know, even before core holders of NFTs show
Mhm.
action.
Agreed. And then I think the last thing, when we come into what can slow this down? That's kind of the question I was trying to ask when we come into moments in the market like this, and thinking, okay, we're catching some momentum, we're going through a period of consolidation. Can we break through like the next levels of resistance that we're starting to find, or are we gonna start to kind of like peter out on this? And the first thing, especially this year, that we come back to is, what curveballs are ahead, and in particular on
Mhm.
macro. And it seems like many of the areas of big uncertainty are starting to come to a close. Probably the last curveball could be if there was an extension again on like the
Mhm.
tariff deadlines of, I think it's August 1st, as the reciprocal tariffs. If we see another extension, I think that puts people off a little bit, because we just want to get to a place where we know where we stand. Japan agreeing a 15% deal. It looks like today the EU miraculously are going to have a 15% deal, which I did not expect after they somewhat escalated yesterday. And we have the Fed meeting on the 29th to the 30th. I'm gonna um I'm gonna be extremely surprised if they
Yeah.
reduce rates in that meeting. But with people like Walla, who are very, very vocal for many reasons about cutting rates, I think there will be a much more split decision than many people are thinking going into that. And I've I've said this now for several months. September is where I think we will get our first rate cut. What size, I'm unsure, but if that happens, I think it's extremely bullish. The only thing that puts that off is a complete curveball in inflation data in the meantime. But even
Yeah.
then, I struggle to see it really materially slowing down that rate cut.
Yeah. I think, it's been interesting to see this sort of geopolitical tightening combined with crypto loosening, as you've had traditional markets price in global friction, these tariff deals being just one aspect of that. You find capital markets looking for more neutral, liquid, always on, 24/7 assets. And so it's like when tariffs tighten, crypto opens. And
Yep.
in some ways, this sort of boring price action from Bitcoin, if you look at it through that lens, it starts to look like strength, not stagnation. It's somewhere that you can I don't, this is crazy to say, but maybe you can seek refuge in.
Yeah, it does sound crazy to say, but I don't disagree with it. I
Hmm.
think you're right. Um, why don't we jump into the last part here, and we can recap a few areas around some of the legislation and some of the additional kind of reg momentum that we're starting to see here now as well.
Yeah, I wanted to follow up on the legislation that we were talking about last week for Crypto Week because, as you mentioned at the top of the episode, Matt, Crypto Week did not disappoint. And although crypto, from a price perspective, and especially Bitcoin, has been taking a bit of a breather, Washington has been making some moves, and some of the most significant crypto legislation ever just got passed last week, really right after our episode aired.
Yeah,
The Genius Act is now law. Trump signed that into law on July 18th. And as a reminder, this requires stablecoins to be fully backed by reserves. It enforces regular audits and real time transparency. It's got dual agency oversight. So you've got this combination of the Fed and the CFTC and SEC. And it applies to institutions that are issuing stablecoins or tokenizing traditional assets. So this is a lot of important, I would say, clarifying legislation. And the reason that it matters is because that clarification is really the regulatory green light that Wall Street needed all along. And this opens the door for big companies, institutional investors, banks on Wall Street like JP Morgan and BlackRock and Amazon to issue or integrate stablecoins. And we've also seen, so this is why we're talking about stablecoin summer, right? This is going to unlock a ton of potential and growth there.
Yeah.
Also, Goldman Sachs and BNY Mellon are issuing tokenized MMFs. So that includes BlackRock, Fidelity, Franklin Templeton. They're all participating, and this can unlock some cool stuff like real-time settlement, programmable yield, and just generally lower friction than existing fund infrastructure. So
I think the
these
money market
tokenized
funds
money
coming on
market
chain.
funds.
Yeah, the money market funds coming on chain, I think is such a no-brainer.
Mm-hmm.
It's there's all of these stable coins on chain already. Great place for institutional investors and retail investors to be able to allocate assets on chain and earn pretty steady yield, especially while we're still in this kind of like high interest rate environment. I mean, we were talking last year about the explosion of traditional money market funds, right? As we saw rates rise. So this again just feels like an evolution of that.
Yeah. I think TradFi and DeFi are actually converging faster than people realize here, for better or worse. So interesting to see what the legislation has unlocked in terms of just stable coins, tokenized money market funds. But it could also lead to a lot more than this. I think it could potentially clear the path for like a USD denominated, I don't know, in-app financialized experience. You can imagine tokenized loyalty points, instant remittances,
The
on-chain
the
wages.
loyalty points is interesting because you mentioned in one of your past comments just then about Walmart, Amazon launching stable coins.
Hmm.
And
Hmm.
I remember when that story first dropped that they were like exploring this, and so many people like, why this is the dumbest thing ever. This is peak like cryptomania, clearly. But I think what a lot of people are missing the point on that piece is that actually these stable coins issued like you have Walmart coin for the everyday user, they're not going to really know that they're holding like a Walmart stable coin. This is effectively going to be used like a loyalty point system. The way I think about this in practicality, I was talking about this on a podcast not long ago that I joined, but you imagine most we had this retail phenomenon of loyalty programs and loyalty cards that came up in the 80s and 90s, or exploded during that period. And a lot of the focus there was on getting access to customer data that then we've seen over the years. You had like that classic, I don't know if you remember that story from Target, where Target were able to tell when that
Hmm.
woman was pregnant before she was pregnant,
Yeah.
like from their buying patterns, which is just like both scary and also phenomenally interesting. Well, the other piece around that is with loyalty programs, you want to have like another way of like retaining customers. And a lot of this, and we see this with like the most common manifestation is like loyalty systems in airlines, air miles, locking you in, creating friction to move. If you're in Walmart and many of these retailers, what we are going to start to see, in particular over the next few years, is an explosion in digital wallets. You'll be able to have a digital wallet for Walmart, just like we see standalone apps for most retail businesses now as well. And within that digital wallet, you will be able to hold a balance. You will be holding this balance, most likely, in a Walmart stablecoin. And Walmart will be able to earn yield on the stable coins because whenever users are depositing funds into their stablecoin, they will back them with treasuries and otherwise that they can earn interest on, which is very beneficial for them to have deposits that sit in there. They can pass those incentives back to their customers, offer them interest on their balance sitting in their wallets. Why would you want that? Because if you're holding balances in a Walmart wallet, you're probably going to spend that at Walmart because it's the only place you can spend it. So, and I think about this a lot, and especially for something like Amazon. I think this is going to completely revolutionize a big portion of the retail game. And so many people are just like, this is a dumb thing. I think the opportunity on that size and scale for real world application here is absolutely enormous. And there's probably loads
I
of
think
things
you're
that I'm not
right.
even thinking about now that could also be
Mhm.
done with that. But what a retention hook that will be for any of these businesses doing this.
Yeah, and I know that this may sound like a little novelty for novelty's sake on the surface, but I think the reality is that for years these major retailers, Amazon certainly not the least among them, have been looking for opportunities to integrate stablecoins or crypto in
Yeah.
general, however you want to put it.
Mhm.
But the regulatory uncertainty around
Yeah.
this, large publicly traded multi-billion dollar generational companies don't really want to touch something like that. Like,
No.
now you have Coinbase started as a startup in this space and kind of grew with the risk and the chaos, right? But there's
Mhm.
very few stable, established, I would even say at this point, somewhat risk averse companies, Amazon being one among them when it comes to like screwing with the SEC,
Yeah.
that are willing to sign, to sort of like take the plunge on a crypto thing in light of regulatory uncertainty. But what the Genius Act and a bunch of the sort of proposed legislation surrounding it, this was just like one part of the Crypto Week package. But what the Genius Act effectively gives stablecoins is legitimacy. It clears a lot of this up, but it draws a line, a pretty clear line, which says, hey, play by the rules or don't play at all. And that's honestly what everybody has been asking for this whole time. It eliminates the gray zone that we were dealing with during the Gary Gensler SEC era is pretty well cleared up for stable coins right now.
I
And
think
so I think you're right,
lawyers are
Matt.
the
Like,
real losers here.
oh man, hey, this is America. They're gonna find a way. The lawyers are gonna find a way in, Matt. Trust me. They're gonna suck 70% of the value out of this thing. But I do think it's feeling like, now, okay, now if we're going to prove out sort of real utility and a use case for stable coins, the path is cleared in retail more than ever.
I completely agree. And I think that's what, for the longest time, everyone, whether it be those building directly in the space or looking for some level of integration exposure, has been seeking. And I think it's also why we're seeing a huge surge in M&A activity, which is a separate piece that
Mhm.
we can probably talk about in the coming weeks as well. But let's wrap things up. I think we've covered quite a lot. I think it's an important time of price action, probably unfortunately going into historically a period of low liquidity going into August while people take a very fleeting time out. Um, I have a feeling that there's going to be a lot of trade desks that are going to have a busy August all of a sudden, though. So we'll see how this plays out. But as always, Austin, it's been a pleasure. And we'll be back next week.
See you then, Matt.